The views expressed in this podcast are those of the panelists and do not necessarily reflect the views of U.S. Money Reserve.
And welcome back to America's Gold Authority podcast. I'm your host, Remy Castillo, and I want to take a minute to introduce our fantastic panel. And starting with my right here, the man, the legend himself, Mr. Philip Deal. If you don't know who Mr. Philip Deal is, let me introduce you to him properly. He was the 35th U.S. Mint Director, Chief of Staff to the U.S. Treasury. He created the 50-state quarter program that many of you collect, and was also responsible for bringing the Platinum American Eagle to fruition. Mr. Deal.
Thank you, Remy. It's
Welcome.
great to be here.
So glad to have you today. And to my left, one of our sales directors. He's responsible for a large division of the company. He's on the phone with clients every day, talking to them, hearing exactly what they're concerned about. And we wanted to bring him on the show today, Mr. Patrick Brunson. Thank you for being here, Patrick.
Thank you for having me.
And of course, no stranger to the show. You've seen him on the show before. This man is a wealth of knowledge, and he came to us from a company you might have heard of called Vanguard, and he's now our Vice President of Education here, Mr. Brad Chastain. Brad, welcome to the show again. So glad to have you.
Thank you for having me.
So, gentlemen, I'm excited to have you guys here because one of the topics that a lot of people are talking about right now is the market uncertainty, and there's a lot of red flags out there, right? Red flags that a lot of people are, and I'm going to quote UBS here, right? 6 out of 7 requirements for a market bubble have been met. And there's these red flags that people are talking about. One of them is the Buffett indicator. What is that? And what does that mean? I'm going to jump to you real quick here, Brad.
Yeah, the Buffett indicator is something that Warren Buffett came up with years ago as a measure for how expensive are stocks. Specifically, it's the value of the stock market, the S&P 500, compared to the United States GDP, or all of the production.
Right.
And so the more expensive stocks are relative to how much is getting produced, the more expensive the stock market is.
Right.
And Buffett is known for liking to buy things cheap on a discount. And so, as you may have heard, he's unloaded a lot of his stocks lately because he views things as being relatively expensive by that metric.
Yeah, billions in cash that he's holding on. Speaking of cash, and I'm going to jump to you in a minute here, Patrick, but I want to get your take on this real quick, Philip. How accurate is the Buffett indicator? Is this something that people refer to? Is this something that people talk about typically? Or is this just a fancy term that people throw out there?
No, I think it's followed by relatively elite audiences. It's not the kind of thing that I would think most consumers and buyers follow closely or even really aware of. They're more likely to be aware of the Jimmy Buffett indicator, but it is. I think it's one that we pay attention to,
Sure.
because of Buffett's well-earned reputation.
Right.
And it's not just a single indicator. It's not just the Buffett indicator,
Right.
but there are numerous other indicators like P&E ratios. It's one of the top ones. More people tend to understand and follow that. And then it's expert opinions, people issuing warning signs that, based on their experience, it looks like a recession is imminent.
Well, speaking of warning signs, I'm going to jump to you, Patrick, right here. You hear from customers all day, every day on the phone, right? What are some of the concerns? We keep hearing this PE ratio and the market being overinflated, the bubble of all bubbles, as they say, right? Talk to me. What are you hearing?
So, the average consumer, from our perspective, they keep hearing it. It's as you stated earlier, Philip, the boy who cried wolf type scenario, where they keep talking about the fact that there's a big bubble in the stock market,
right,
and it's going to pop someday. And some people are confused by the whole thing because we've had all the different indicators that would suggest the stock market would correct already, but it just hasn't done it yet, And I think we're entering a period of uncharted waters, compared, relatively speaking, to a lot of people's understanding of PE ratios in the stock market. And I think that's why people are starting to wonder how much bigger can this whole thing get. And you're seeing things like the Buffett indicator, inverted yield curve, all these different signals that would signal some sort of a recession or correction is coming.
Right.
But it just hasn't shown up yet.
So It's interesting. We're talking about these warning signs and these red flags. People are concerned. They're worried, right? Brett, when we talk about this Fed index indicator, index that's used, what are we talking about here? And I know this is something that even the most knowledgeable individuals have a hard time understanding. So simplify this for people watching at home.
Yeah, the Federal Reserve recession indicator
Yep.
is what you're referring to. It's a metric that they use to look at different parts of the economy
Okay.
and evaluate how likely a recession is.
Right.
Typically, that indicator is around a level of 15. Right now, it's over 55. So it is really, really high. Anytime it's been that high in the past, it's been followed by a recession. But it's just simply taking a measure of different economic measurements and where they stand today to get a gauge of where the economy is in relation to potential recession.
So it's not a matter of if, it's a matter of when. Is that what I'm hearing?
That's what most people would believe. Yeah.
Well, so let me ask you a question, Philip, because you worked Capitol Hill for years, right? When you were at the Mint, people would buy gold and buy silver because they were trying to hedge and they were worried about the economy. And consumers out there, they can't pay their bills right now. Credit card debt is at an all-time high. So where do people turn that are in a situation that are financially strapped?
Yeah.
They don't have maybe liquid cash to buy gold or silver or try to hedge. What do they do?
Well, it's always that $64,000 question.
Yeah.
Is am I able to save when I can't pay my bills?
Right.
And really, it's so easy to say it, but in the end, it's belt tightening. We have become so accustomed to spending beyond our means
Right.
that we don't really even understand what our needs are anymore. And I think it requires a real disciplined approach to assessing what do we need in order to get by and save for the future. Now, gold, you don't have to buy gold in bars at a time.
Okay.
You can buy them a coin at a time.
Sure.
And, the U.S. Mint produces coins as small as 1/10 of an ounce.
Right.
You can buy 1 ounce. You can buy multiple ounces of gold. So it's not as though gold is outside your means.
Right.
Also, silver is obviously much cheaper to purchase. And silver, there's a historic relationship between the price of silver and gold. And it's gotten out of whack in recent years, especially as the gold market has really caught on fire. And so the expectation is silver will rise back into that ratio. And I think it's fair to say that, we thought we saw that takeoff begin, but then silver sort of fell back. So I think the buying opportunity for small buyers whose means are really limited may rest in silver. And the Silver Eagle is, the last time I looked, and we bragged about this all the time. I'm a native Texan, so we looked for things to brag about when I was at the Mint. And the Silver Eagle was the most popular and most liquid legal tender vehicle that was available in the world market.
Yeah. So why is my financial advisor not advising me to buy precious metals?
Well, I have an opinion on that.
Go ahead. I'd like to hear everybody's opinion on
I
this.
bet there are lots of opinions on
sure.
this.
And that's what I want to, that's why I'm throwing this question out there.
Yeah, it's a real good question. And I think there are answers that are critical of the community.
Sure.
And then there are some that also recognize from the inside what the dynamics are that lead financial analysts away from recommending precious metals and gold in particular. And this is one of the things that I've been with the company for 12 years. I've been in the business for 30 years, more than 30 years from the time I was director of the Mint. And it was one of the things that really kind of stuck with me is all the mythology and hocus pocus that surrounds gold, and ideology and politics and all of this. And one of my preaching points is that gold is for everyone, and it has a value for virtually everyone in the market. Doesn't mean that everybody should have the same allocation to gold.
Right.
Different people need different allocations. They have different risk tolerances. They have different objectives. But I think that what over the last 5 years or so, and this is reflected in everything I've written that's published on our website, in my Market Insiders, it reflects the research that I've done on what the basic value proposition is of gold, independent of all that mythology and hocus pocus. And I think, and there are a number of myths that I feel like I've burst through. One of them, for example, is that gold is only a bad news investment. It's only a hedge, that it performs extraordinarily well in hard times, but there's sort of a consensus or a concession that, well, it doesn't perform so good in good times. That's simply not the case and has not been the case for 25 years. If you look back over the last 16 months, since early October,
Right.
The economy, the U.S. economy has been the strongest in the world. These have been strong times, and gold has outperformed the S&P and the NASDAQ over that period of time. So it's not been just a bad news investment. It's been a good news investment. And it's not a matter of just the last 16 months. You can go back 25 years and you can see the good times and the bad times and how gold has performed well in both, but it's a spectacular play and protecting wealth in hard times.
And I appreciate your take on that, but you guys jump in here because I want to hear from you. And why is it that, and thank you, that's a nice insight here, but why is it that my financial advisor is not advising me to buy gold? You're talking to clients every day. You worked for one of the largest institutions in the world, Vanguard.
Yeah.
Smart people, they see the price of gold moving. Why are they not telling me to buy physical metals and to put them as part of my portfolio?
First of all, some advisors do. In fact, we work closely with some advisors.
Okay.
But they are independent advisors that have the ability to do whatever they want and whatever is directly in that client's best interest. What many times people don't realize is a financial advisor that works for a larger institution isn't really the ultimate decision maker, doesn't have the autonomy to do anything. They have to stay within the guidelines of that organization and what another group has decided are appropriate investments and portfolios, and then they'll align people to those portfolios, their clients to those portfolios, and but they are limited to what that company will offer as an option. So some of them are just limited in terms of what they can offer because it's not something they can offer or have been educated about. They're not even familiar with the asset class a lot of times.
Yep.
So it can be a variety of reasons, but there are advisors, and we work with some of them to who make sure that it is an integral part of their clients' portfolios.
Yeah. So, go ahead, please. Let me hear your take.
Very similar to what he just said. Just like our clients, a lot of these bankers and advisors, they really don't know much about the gold market in general.
Right.
We're not taught about it.
Sure.
I mean, even going back to grade school, when you take your first class to learn how to manage a checkbook, they teach you how to balance a checkbook, and they teach you to put $1,000 away in a savings account every year that's doing 6%. And if you do that, by the time you're 65, you'll have $1 million in the bank. Where's the savings account paying 6 or 7%? Some of these things don't really apply anymore, but they never ever taught us about owning gold. And correct me if I'm wrong, I don't even think they study this or teach them about this when they're getting their Series 7. And so, owning gold in the physical aspect is just very, very foreign to a lot of Americans.
And that, and you can understand it from the point of view of the advisor that they're not comfortable if they haven't been educated and they're not incentivized or directed from their companies toward gold.
Sure.
Then a client who comes in interested in gold is not going to be encouraged to follow that because the advisor isn't knowledgeable in it. But I think there's another factor here, and it may be operating at the level of the individual advisor, maybe operating at the level of their organization. But buyers of gold are not traders of gold. They buy and hold gold.
Yeah.
And if you put 15, 20% of your portfolio away in gold and you put it there and leave it there for 5, 10 years, then it's not being traded.
Yeah.
Your advisor is not making any money.
Sure. So the motivation's gone.
So their motivation to even become educated, if they're not encouraged to be educated, is absent.
Right.
So I think, someone who's, and I've heard this over and over again, where people have come to me and said, I want to learn more about gold, but when I talk to my financial advisor, I get a blank stare. And I certainly don't, they're sympathetic, but I don't get encouraged to do it.
Yeah.
And does that mean that I shouldn't trust my financial advisor? And I tell them, no, it doesn't mean that. It means that they may be ignorant about, they're unknowledgeable, or their organization, I've learned this from Brad over the last year, their organization really doesn't support gold.
Yeah.
It's kind of the old adage, if all you have is a hammer, then every problem
Yeah.
looks like a nail.
Yeah.
That hammer
Yeah.
is going to be the solution.
Yeah.
Right?
Yeah.
And when somebody's not knowledgeable, they use the tools that they are familiar with to try to solve the problem, even though
Yeah.
they might not
Stocks
be
and
the
bonds.
best tool.
Yeah.
Great analogy, Brad. Well, that's all we've got time for on today's podcast. If you're interested in learning more about precious metals as part of your portfolio, or learning more about the topics covered in this episode, call the men and women at U.S. Money Reserve. Ask for a free gold kit, and your account executive will walk you through the different options and show you how easy it is to diversify with precious metals. We want to thank you for joining us on another episode of America's Gold Authority podcast. We'll see you next time.
The markets for coins are unregulated. Prices can rise or fall and carry some risks. The company is not affiliated with the U.S. government or the U.S. Mint. Past performance of the coin or the market cannot predict future performance. All calls recorded for quality assurance. Offer void where prohibited.